Hi guys, welcome to Financial Health and Wealth, where we educate you on the various ways to improve your life financially and to live long, healthy lives. So today we're going to talk about if you need life insurance. And if you'd like to see more of this type of content, then like, subscribe, hit that notification bell so you know about the future videos. Let's get started. It might be uncomfortable to think about the need for life insurance, but it's an important part of your family's financial strategy. It helps protect your family during the grieving process, gives them time to figure out their next steps, and it can provide income to cover normal bills, your mortgage, and other unforeseen expenses. Here are some guidelines to help you figure out how much is enough to help your family and to keep your family's future safe. So, who needs life insurance? A good rule of thumb is that you should get life insurance if you have financial dependents. That can range from children to spouses to retired parents. It's worth remembering that you might provide financial support to loved ones in unexpected ways. A stay-at-home parent, for instance, may cover childcare or education costs. Be sure to take careful consideration when deciding who should get coverage. Well, what does life insurance cover? Life insurance can be used to cover a variety of unexpected expenses. Funeral costs or debts can potentially be financial and emotional strains, and it can cause the loss of steady income and employer-provided benefits. Think of life insurance as a buffer in these situations. It can give you a line of defense from financial concerns while you process your loss and prepare for the future. How much life insurance do you need? Everyone's situation is different. So consider who would be financially impacted in your absence and what their needs would be. If you're single with no children, you may only need enough insurance to cover funeral costs and pay off some of your debts. If you're married with children, consider how long it might take for your spouse to get back on their feet and to be able to support your family, how much childcare and living expenses might be, and how much your children would need to attend college and start a life on their own. A rule of thumb is to purchase 10 times as much life insurance as income as you would make in a year. For instance, you would probably buy a $500,000 life insurance policy if you make $50,000 a year. Note, be sure to talk with a qualified and licensed life insurance professional before making any decisions. By the way, I am a qualified and licensed life insurance professional. An older person with no kids at home may want to leave behind an inheritance for their children and grandchildren, or ensure that their spouse is cared for in their golden years. A business owner will need a solid strategy for what would happen to the business in the event of their death, as well as enough life insurance to help ensure that the employees are paid and the business can either be transferred or closed out with costs covered. How much will it cost? The younger you are, the less expensive your life insurance may be. Life insurance companies are more likely to offer lower premium life insurance policies to young, healthy people who will likely not need the death benefit payout of their policy for a long while. At this point, you might be thinking, well, I'm young and healthy, so why do I need to add another expense to my budget for something I might not even need for a long time? Well, unlike a financial goal of saving up for a down payment for your first house, waiting for the right moment to get life insurance, perhaps when you feel like you're more prepared, is less beneficial for you. A huge part of this is due to getting older. As your body ages, things can start to go wrong, unexpectedly and occasionally chronologically. Ask any 35-year-old who just threw out their back for the first time and is now Googling every posture perfecting stretch and cushy mattress to prevent it from happening again. But don't worry, you're probably not going to go to pieces like a piece of china on your 30th birthday. But your mortality is certainly something to keep in mind. The human body breaks down with time, and your premium may reflect both the age increase and a pre-existing condition. If you experience certain types of illnesses or injuries prior to getting life insurance, it would be often considered a pre-existing condition, which may cause a premium to go up. Possible scenarios like the reoccurrence of cancer or sudden inability to work due to re-injury are red flags for insurance companies because it increases the likelihood that a policyholder will need their policy's payout. Life insurance may not be anyone's favorite topic, but it can be a lifeline to your family in the event that you're taken from them too soon. It should always be a consideration for your financial plans to protect everything that you've worked for. With a well thought out life insurance policy for you and your situation, you can rest knowing that your future has been prepared for. So thanks for watching, and as always, hit the like and subscribe buttons to keep getting future content, and go ahead, tap that notification bell while you're at it. Enjoy the rest of your day.